Good evening, my Ratchet Tea family. Hello, it is Wednesday. It's your girl, Menda Renee, and I'm here in the house, honey. Pookie is cooking tonight. Did you see me? Did you see my little tag there to let you know that I am here? It is Wednesday night. It is 8 o'clock. It is Ratchet Tea time. It's Wake Up Wednesday with your finance, with your girl, Menda Renee. So you know what time it is. Share with your friends. Tell them that I'm on. Tonight we're going to be talking a little bit about if you're owed taxes, if you're in tax debt. This might be the podcast for you. If you know somebody that has tax debt, you need to share it with them and let them know that, yo, you need to listen to this podcast because she's probably talking about you 9 times out of 10. Yeah, it's you. So, honey, the garage door is open. You smell the fried chicken cooking because Pookie, honey, is here. He is cooking. Okay? It is hot tonight. The topic is hot. The tea is hot. So you know what it is. Get yourself your favorite drink. Pour your coffee or your tea, whatever you got to do. Snuggle up on the sofa, okay? Tell your man to leave you alone. Tell your chick to leave you alone. Or cuddle up together and watch it together, honey. Maybe you're both in tax debt, okay? No one's going anywhere, okay? You're going to jail because you got tax fraud going on. But pour it up. Jump into my comments if you have any comments or questions. I'm here for you. I'm here for the people because I love the people because I live for the people, okay? So tonight, you know, I am got my little okay, in my little Ratchet Tea mug. Okay, it's something nice and cool and refreshing, and it's going to hopefully carry me through the podcast. Okay, hopefully I don't pass out. Okay, if I pass out, just put the sheet on me. Okay, somebody just put the sheet on me. Okay, that's what I'm talking about. Just put the sheet on me. So last Wednesday, we were talking about FHA loans. Okay. And I briefly brought up like jumbo loans, interest only loans. And, you know, I told you guys that I was going to come back today and talk just briefly on that. So, you know, I'm sorry, y'all. This hair is hot. It's hot. The hair is hot, honey. I look like I need to be in the Lion King. Okay. I'm Simba. Okay. I'm Simba. Somebody lift me up. Okay. Okay. So tonight, I'm going to touch briefly on adjustable rate mortgages very quickly, and then we're going to talk a little bit about how to get out of tax debt. Okay, so here's your Jeopardy question for the night. Okay, just in case you're on Jeopardy. Okay, here we go. What is an adjustable rate mortgage? And here we go. An adjustable rate mortgage, also known as ARM, which is an ARM, is a type of mortgage in which the interest rate applied on the outstanding balance varies throughout the life of the loan. With an adjustable rate mortgage, the initial interest rate is fixed for a period of time. Period, Pooh. All right. After this initial period of time, the interest rate resets periodically at a yearly or even monthly intervals. ARM or adjustable rate mortgages are also called variable rate mortgages or floating mortgages. Oh, you see that? You see, I'm giving you the knowledge. I'm giving you the vocabulary. Okay, maybe we'll have a quiz at the end of the show. All right. The interest rate for ARMs is reset based on a benchmark or index plus additional spread called an ARM margin. Okay. All right. So understanding an adjustable rate mortgage. Okay. Typically, an adjustable rate mortgage is expressed as two numbers. In most cases, the first number indicates the length of time the fixed rate is applied to the loan. For example, 2/28 ARM features a fixed rate for 2 years, followed by a floating rate for the remaining 28 years. In contrast, if you see 5/1 ARM, boasts a fixed rate for 5 years, followed by a variable rate that adjusts every year, as indicated by the number 1. And similarly, a 5/5 ARM starts with a fixed rate for 5 years and then adjusts every 5 years. Okay, and we say, what do we say to that? No, we don't want that, nigga. No, we don't. Okay, you don't want that. Okay, try to get an FHA loan or conventional loan if you can. All right. Then we also talked about what is a jumbo loans, and I'm going to just touch on that super brief. And a jumbo loan, also known as a non-conforming loan, it sounds bad already. A non-conforming loan is a type of conventional mortgage. The loan exceeds the limits for conforming loans for the Federal Housing Finance Agency. It's FHFA. It's not FHA. All these little synonyms, all these little acronyms or whatever. The FHFA sets the limit for conforming loans every year, and in 2021, the limit is $548,250 in most parts of the U.S. In areas with a higher cost of living, such as Alaska, Hawaii, Guam, and the U.S. Virgin Islands, the limit has been bumped up to $822,375. So, all my people say no. All my people say no. All my people say no. Okay, so we don't want that. Okay, conventional FHA, go that way if you can. All right, or just buy a house out in cash. And if you do, just buy me one too. It's like a BOGO. If you buy one for you, then you gotta buy one for me too. Okay, because I'm the one that gave you the information. It's like a payday. It's like a gift that keeps on giving. Yeah. Just keeps on giving. Okay. So let's just get right into it, okay? All right, it's hot. I gotta turn on my my Bonaire fan. Oh, it's not on, that's why it's hot, y'all. Okay, so what are the benefits of paying my taxes on time? Okay, so as you know, May 17th was the last day to file your taxes. If you didn't know, now you know. And if you didn't file an extension, you better be trying to file them ASAP. Okay, definitely try to file them ASAP. But May 17th was the last day to file your taxes. So hopefully you did what you had to do. Okay, so we're going to talk about people that owe back taxes. Maybe you filed your taxes, now you owe taxes. You know what I'm saying? Maybe your Schedule C person there wasn't there to do your Schedule C this year, and now you owe. You know who you are. Now, let's not play these games, okay? Let's not play these games, okay? You know who you are. I'm just saying, you know who you are. So here we go, honey. What are the benefits of paying my taxes on time? Well, one is it keeps you out of jail. No, I'm kidding. No, it really does keep you out of jail. Okay, by law, the IRS may assess penalties to taxpayers for both failing to file a tax return and for failing to pay taxes they owe by the deadline. Let's hit you with that one more again. Maybe you didn't hear me. Maybe the mic's not on. Is the mic on? Okay. All right. By law, the IRS may assess penalties to taxpayers. That would be you, the person that owed the taxes, for both failing to file a tax return and for failing to pay taxes they owe by the deadline. I just told you the deadline was May 17th. So hopefully you paid your taxes by then. Or you got an extension, period. Okay. If you're not able to pay the tax you owe by the original filing due date, the balance is subjected to interest. I did a podcast on what is interest. You need to go back and find that podcast. Okay. And a monthly late payment penalty. There's also a penalty for fail to file a tax return. What you say, Menda? I didn't file my taxes. Okay, because there's also a penalty for failure to file a tax return. So you should file timely, even if you can't pay your balance in full. These are things that you need to know, people. These are things that you need to know. I'm here for the people because I love the people. I'm trying to give it to the people. Okay. All right. It's always in your best interest to pay in full as soon as you can to minimize the additional charges. Okay. And the benefits for, of course, filing your taxes on time is one, you just should. Okay. That's just common sense. Avoid it. It helps you to avoid accruing additional interest and penalties. Because they will tax you. They will send you a nice little letter in the mail that says, hi, Menda Renee, you failed to file your 2021 taxes. And here's a nice little penalty of $200, $300. Have a good day. Regardless of if you owe or not. How about that? Okay. 2, it helps offset your future refunds. Okay. And 3, it avoids issues of obtaining loans in the future. Okay. So if you can't pay the full amount due, pay as much as you can. All right. And visit, listen, I'm going to tell you every time, go to www.irs.gov/payments to consider their online payment program. Okay. Now, with that being said, honey, I got a little tax debt. How do I settle this tax debt? Okay. So it's May 17th. I filed my taxes. My homegirl that does my Schedule C, she got COVID. Okay. She got COVID. She's at the house. She can't even do my Schedule C. Okay. Now owe taxes because now I had to actually tell the truth on my tax return. You know who you are. I'm not saying everybody does it, but I'm just saying a good portion of you guys do it. Okay. A good portion. A good portion of you. Okay. So how to settle back tax debt. Here we go. All right. First, determine which type of settlement you want. And we're going to go through the payment plans. We're going to go through the installment plans, okay, to help you out. Second, you want to submit the application to the application forms to the IRS. Don't submit it to Menda Renee. I can't help you. Okay. Well, I can if it's for a fee. I'm just trying to tell you, I don't do a lot of stuff for free, honey, but I'm giving you this knowledge for free. Okay. If the IRS denies your application, you have to make other arrangements. What? If the IRS denies your application, you will have to make other arrangements, okay, to pay your tax debt. Yes, honey. Yes, you. All right. If the IRS accepts your application, then you make the payments as arranged with them. Okay. So whatever your arrangement with the IRS, whatever you set up with them, stick to it. Okay. Stick to it. Do something good for your life. Stick to something one time in your life. Okay. Now, when they accept your application, at this point, you're in good standing with the IRS. Now, however, if you default on the arrangements, the IRS could revoke the agreement. Now, we talked about this several other podcasts about how y'all people don't like to pay y'all bills. Okay. How y'all like to pay a little and then forget. I didn't know how to pay that. Oh, I had to still pay that. Oh, I didn't even know. You do that with this, they're going to revoke your agreement. Okay. So an example of how this works is if you owe the IRS $50,000, and it might not be, you could owe 10, whatever. Just this is an example. Okay. I try to go to the mid extreme. Okay. So if you owe the IRS $50,000 and the IRS agrees to accept $5,000 as a settlement, and you agree to make 10 $500 payments over the next 10 months, that would be like an example of an agreement that you would have with them. Okay. Now, if you have paid $1,000 and then stop making payments to the IRS would definitely cancel the agreement, canceled, okay, and resume their collections on the full amount of $49,000. And you can have a good day with that. And you can best believe they're going to do that, okay, because they're the IRS. They're greedy. They're very selfish, okay? They don't care about you. Unlike me, I care. That's why I do these podcasts, okay? So here we go. How to settle taxes owed. You say, Menda Renee, how do I settle these back taxes? Okay. First of all, you need to know that one, you could go bankrupt on them. Okay. I'm not a bankrupt lawyer. I'm not a bankruptcy lawyer. I don't get any kickbacks, but you could go bankrupt on back taxes as long as they're like 2 years or 3 years after the year that you filed. So in 2021, if you have owed taxes in 19, 18, and 17, you could go bankrupt on 18 and 17. Okay, just so you know. Okay, consult your bankrupt attorney. Okay, consult them. Okay, so here we go. How to settle taxes owed when you go bankrupt. 2, you need to file your back taxes. Okay, you can't go bankrupt and you can't make any agreements with the IRS if you have not filed all your back taxes. So if you owe back taxes from 2021 and you didn't do 2020, 2019, 18, whatever, you need to file those. Okay, the IRS only accepts settlement offers if you have filed all required tax returns. So for you people out there that are scared and they're like, Menda, I don't know how to do it alone. I don't want to do it alone, girl. You can always call me. My number is 561-299-4100. You can hit me up in the DM. You can leave a comment, okay? And I will help walk you through it, okay? I will help you out. I will do a consultation for you, okay? So remember, don't be scared. This is the beginning of the first day of your new life. Just think of it like that. Like, oh, I haven't filed taxes in 5 years. Well, just do it and we can work through it. Okay. Don't be scared. Okay. Don't be scared. Okay. So if you have filed unfiled returns, make sure to file those returns before applying, because if they find out that you have taxes that are not filed and you need to file them, they will deny you. Okay. So you must also be up to date on your current tax obligations. And you're like, what is that? What are my current tax obligations? I'm just trying to file my taxes. But we'll talk about for businesses, that includes payroll taxes and sales taxes. And for individuals, it includes estimated quarterly taxes or withholding. Okay. So 2, amend ghost returns. Okay. In some cases, if you have unfiled back taxes, the IRS creates a substitute for return. It's also known as an SFR for you. Okay, these are ghost returns that do not include all of your potential exemptions and deductions. Did you know that? I bet you didn't know that the IRS actually files these ghost returns on your behalf. That's how you get caught up. That's why I be trying to tell y'all. Mic is on. Honey, the mic is, hold on, I need a sip, okay? Because that was just some good tea right there. Let me sip my tea, honey. Sip the tea. I bet you didn't know that the IRS files ghost returns that do not include all of your potential exemptions and deductions. Oh. I feel like my work here is done already. You know what? I feel like I just need to go home. I am home. I just feel, you know what? I need to go take a hot shower. I feel like I done served the people well. My job here is done. I feel like that's a tidbit that no one ever knew. But anyway, we're going to continue because we want to keep the blessings flowing. Okay. So as a result, your tax liability is probably higher than it should be. Okay, so you don't want that. Don't let nobody else do your tax returns, because when the IRS do it, they don't take no deduct. They don't care. So if they have 1099s out there or W-2s that you ain't never filed for years, oh, you got tax returns, honey. You just never did them, but they did them. Okay, so when you go, oh, I never filed, and oh, honey, oh, it's out there. I promise you. As long as somebody submitted some income in your name. If you did a W-2, a 1099, if somebody submitted that to the IRS, baby, and you ain't never filed, you can best believe they have filed on your behalf, okay? You might not know, but they know, okay? So number 3, apply for a settlement. Once you're in tax compliance, you can start to apply for a settlement. A tax professional, such as myself, can help you determine which settlement offer is right for your situation. Okay, so we look at your tax situation, and we're going to go through the right now we're about to go through like the payment plans. Okay, like what kind of payment plans would be better. Okay, and at that time we would sit down and see what your tax situation is, and we pick the appropriate plan, file the work, make sure all your taxes are filed up to date, and move on. Okay, so all right. There are multiple ways to settle your tax liability. Number 1 is called an offer in compromise. An offer in compromise is the most sought after settlement method but it is extremely hard to get. So when you go for an offer and compromise, you better make sure your I's are dotted and your T's are crossed, honey, because you got one shot. And if they deny you, baby, it's going to be hard to get an approval, okay? So the IRS requires very detailed financial information to get your offer accepted. You have to convince the IRS that you cannot pay more now or in the future, okay? So listen, you got to be poured and poured and poured. Listen, because they don't play that. You got to convince, listen to what I just said. You got to convince the IRS that you cannot pay more now nor in the future. That's like convincing your mama to let you have a boy sleep in the same bed under the same roof when your mom and daddy home with you. Yeah, good luck with that. Okay, good luck with that. Because if it's me, I'm gonna be like, yeah, no, you grown and you need to get out. Okay, y'all can sleep in the street together. All right. Okay, with a lump sum cash offer and compromise, you make 20% upfront payment and pay the rest of the settlement within 5 months. Let's do a little bit of math, okay? All right, let's do a little bit of math, okay? So if I owe $50,000 and I have to pay 20% upfront, okay, offer and compromise, okay? They say, okay, well, okay, Menda Renee, $10,000. That's what you're gonna pay me, okay? So I'm gonna pay $2,000 up front of the 10, okay? And the rest of the settlement within 5 months, okay? So that's gonna be $8,000 that I'm gonna pay within 5 months, period, okay? So with the periodic payment offer and compromise, you pay the settlement over 6 to 24 months, okay? They also have something called a partial payment installment agreement. So a partial payment installment agreement allows you to make monthly payments on your tax liability. You make payments over several years, but you don't pay all of the taxes owed. As you make payments, some of the taxes owed expire. So that's called the partial payment installment agreement. And for my Patreons, I offer that service. I help you, go through the partial payment process. I help you with that. You can do a one-on-one consultation personally, So another installment agreement that they have is called a guaranteed installment agreement. I hope somebody got a pen and a piece of paper, okay? Writing this down, honey. It's like homework. It's like, listen, this is financial food for your brain and for your wallet and for your life, okay? Somebody needs to get on the hotline and be like, yo, Menda Renee is speaking facts right now, okay? Even if you don't have any tax issues, even if you don't owe any back taxes, for you Schedule Cers, when you get audited and you need to do one of these agreements, yo, send it to them, okay? Hey, warning comes for destruction, okay? Send it to the people, okay? Give it to them. Tell them, you better look at this video. Y'all better quit playing. You better look at the Menda telling y'all. Okay, Menda telling you, she like ESPN, honey. She's telling you, okay, she's giving you the warning. She's giving you the food for your brain, okay? Because when you get audited, you're going to need it, okay? You're going to need it. So a guaranteed installment agreement, the requirements must have less than $10,000 owed in back taxes. You can combine the taxes for multiple years. So meaning that if I owe 2,000 for 2018, 2,000 for 19, and 2,000 for 2020, I could combine all that. That's $6,000. Okay. The $10,000 only applies to the actual tax liability. Okay. It does not account interest and penalties. Remember I told y'all, like when you file late, or when you owe taxes and you don't pay, there's taxes. There's interest and there's penalties on top of the tax that you owe. And they charge interest every day. And they charge penalties like every month, okay? So for instance, if you owe $11,000 and just $9,000 is from tax amount owed and the other $2,000 is from interest and fees, you can qualify, okay? And this is how you qualify. 1, you and your spouse, if applicable, have filed the last 5 years of tax returns. 2, don't currently have an installment agreement with the IRS. 3, not in bankruptcy. 4, have not had an offer in compromise accepted recently. Okay. 5, tax liability can be paid off over the next 3 years or by the collection statute expiration date. And we can get into that in another time, whichever comes first. 6, you agree to pay and file all tax returns for the duration of the agreement. 7, estimated quarterly payments are up to date if you work for yourself. 8, if you're employed, your employer is withholding enough from your paycheck. Now, if necessary, you have submitted a new W-4 to increase how much your employer withholds. And we could talk about that on next Wednesday about proper holding when you get jobs, like on your W-4s. Like, when you get a new job and you fill that in. I have so many people call me about that. Like, Menda, how many? It says on here, Menda, I can withhold 8. My withholding number is 8, and it's only me. You know what I'm saying? So I get so many questions regarding that, and we could definitely go over that on Wednesday, because that's you need to know. You need to know that, because that's like I said, for the benefit of yourself. Okay. Another agreement is called the streamlined installment agreement. Streamlined installment agreements are best for taxpayers who owe less than $50,000. See, there's options to this thing, y'all. There's options. Okay. These agreements are called streamlined because the IRS does not require you to submit detailed financial information. This might be good for some of you scheduled seers, okay, who don't like to, give all that verifiable, detailed financial information. You understand what I'm saying? Okay. Oh, hey, Brittany. She says, hey, Auntie, I'm going to text you. Well, text me, girl. Text me. Yes. I hope you're not in tax trouble. Okay. Oh, my God. All right. Oh, Lord, Jesus, somebody get the sheet. I think this is a sheet moment. This just might be a sheet moment here right now. Oh, Lord. Woo. All right. Don't scare me, child. Hit me back. Let me know everything's okay. All right. All right. So, however, the IRS may need detailed information if you've defaulted on previous agreement or if you don't want to set up a direct debit. And you know what a direct debit is when they automatically take it out your account, honey. They take it out your account. Period. Poo. So the requirements on how to be approved for the streamlined installment agreement is, and here are the requirements. Okay, you must be an individual who owes less than $50,000 in back taxes. That includes penalties and interest. Okay, businesses must owe less than $25,000. Out of business sole proprietors can owe up to $50,000. Number 3, you have filed all required tax returns for the last 5 years. If applicable, your spouse has filed all tax returns for the last 5 years. Currently, you are not in an installment agreement with the IRS. You are not in the midst of filing bankruptcy. And if an individual, you can pay off your back tax within 72 months, which is 6 years. It's like a car payment, child. Or by the collection statute expiration date, whichever comes first. All right. If you have a trust fund tax payment plans, if a business, they must be paid within a full 24 months. Up to date on estimated quarterly tax payments. And if you are an employee, your boss is withholding enough from your paycheck so that you are likely to owe tax at the end of the year. Okay. Super great information. This is stuff that you guys need to know. Okay. All right. So there is another agreement. And hold on. I'm going to take a break. I'm going to take a quick little second. Okay. All right. Because girl, child, we are hot. Okay. Because the information is steaming, honey. It's steaming. Okay. It's steaming. Okay. Get yourself a Ratchet Tea mug. Okay. Hit me on the DMs. Okay. Here we go. All right. Financially verified installment agreement. With a financially verified installment agreement, you can make monthly payments on your tax liability, but to get the agreement approved, you give the IRS detailed financial information about yourself. So this might not be for some of y'all, okay? Because y'all know how y'all okay. Let's stick to the script, okay? The key difference between this agreement and a guaranteed or a streamlined installment agreement is that you verify your financial situation. So for some of y'all, this might not be good for y'all because y'all know how y'all like to hide y'all financial information. Y'all know how y'all do. Y'all know how y'all do. That's all I got to say. That y'all know how y'all do. Okay. So here we go. Who should use this verified financial agreement? Traditionally, the IRS requires taxpayers who owe over $50,000 to verify their financial details to get an installment plan. Additionally, if you owe between $25,000 and $50,000 and you have recently defaulted on an installment plan, you also need to apply for a verified financial agreement. Whew, okay. Another plan is called a partial payment installment agreement. A partial payment installment agreement, also known as PPIA. I'm giving it to y'all. The vocabulary, y'all, I'm trying to tell you, educate yourself, is when you make payments towards your taxes that are lower than are required with a standard IRS installment agreement. This means that some of the taxes may be forgiven since taxes won't be collected by the collection statute expiration date. And once again, we will go over that. The IRS will check in periodically to see if your financial situation has changed. Sort of like having food stamps or Section 8. It's like a recertification. They check in, make sure everything is good, make sure your financial situation is the same, and they continue with what you got going on. Okay. And if you could pay more, they'll make you pay more. If you can pay less, they make you pay less. Okay. If your financial situation has not changed, then it is likely the remainder of the taxes will not be required to pay. You better listen. I'm trying to listen. I'm trying to help somebody here tonight. Okay. I feel like I should pass the collection plate because the word is so good. Okay. The word is good. Okay. The word is super good. Okay. If you have a business, in business trust fund installment agreements. Okay. This is for you. An in-business trust fund installment agreement is an installment agreement for unpaid trust. Oh, this ain't for you. It's for trust fund people. My bad. Trust fund. Oh my God. Oh God. Okay. Let me go back. In-business trust fund installment agreement. An in-business trust fund installment agreement is an installment agreement for unpaid trust fund taxes, payroll taxes. To qualify your business, you must owe less than $25,000 and you must be able to pay off all the tax liability within 24 months. If you owe over $10,000, you have to set up automatic payments, okay? What happens after you apply for any installment agreement, okay? So what happens? Okay, what happens? You say, Menda Renee. Okay, you went over all these installment agreements. I'm ready. Okay, I'm sweating. Okay, because I didn't pay my taxes, Lord Jesus. You know what I'm saying? I'm going to go tax fraud, Lord. What can I do? Okay, so what happens after you apply for one of these agreements? Because you don't call me. You don't said, Menda Renee, I need your help. I'm gonna be like, girl, I'm here, boy. I'm here, my little sugar booger. Well, wait. Why do old people call people sugar booger? What is that? Don't call me a sugar booger, okay? If it's a sugar booger, that means that you've been digging up your nose and you've been putting it in your mouth. That's nasty, just so you know. And it's very unsanitary. Don't touch me. All right. So what happens after you apply for an installment agreement? Typically, the IRS accepts or rejects your installment agreement request within 30 days. If you meet the requirements, the IRS automatically accepts guaranteed and streamlined installment agreements. To learn about the acceptance process for other types of agreements, check out the irs.gov sites. Okay. And we can do that. We can do that on another Wednesday. Listen, child, I'm here. I'm here for the people because I love the people, because I live for the people. Okay. This is what I'm here for. Hopefully next week I have some straight hair. Like, okay, because this stuff right here, child. Okay. I'm just looking at it. Okay. All right. So back to what I'm saying. If you miss a payment or if you fall behind on other taxes that you owe, the IRS may terminate your installment agreement. However, in some cases, if you incur additional tax liability, you can roll those amounts into your existing installment agreement, which is it's a good thing. Okay, so if I'm in, that typically means if I owe back taxes as of 2019, and in 2020 I owe back taxes again, I can enroll 2020 into my 2019 installment agreement. They're just going to lump it all together. Okay. The IRS only lets you do that if new amounts don't add much time or money to the agreement. So if it's only a few $100s, that's cool. If it's another 50,000, it ain't going to happen. That ain't happening, Captain. It's a no-go. It's a no. It's a no for them. Yeah, it's a no for the IRS. Okay. All right. Additionally, if the IRS finds out that you shared incorrect financial information on your application, the agency can also terminate your agreement. All right. If the IRS terminates the agreement, they may place a tax lien on your assets or levy your paycheck, bank account, or Social Security checks. Let's step here and let's pause. Okay, let's talk about this very briefly. Okay, so if the IRS terminates the agreement, they may place a tax lien. A tax lien is the IRS goes and says, "Hey, Menda Renee, you have a nice old house in New York. You owe $50,000 and you didn't abide by your agreement with us. So we're going to go ahead and put a tax lien on your house." Okay. Now, what does that mean, Menda Renee? Well, that means that I can't sell my house in New York until the tax lien is paid. That's what that means. That means you're stuck like Chuck. That's what it means. And that means until I don't care the day that the tax lien stops is never, because even if you die, the tax lien is still on the house. Somebody has to pay the tax lien. Just so you know. Boom. All right. All right. So, or they can levy your paycheck. So they can say, "Hey, you don't want to pay? It's cool. We just garnish your wages." That's what it's also called. Garnishing of your wages. Okay. They can also, if you have money in a bank account, right? You're like, "Oh my God, I got $5,000 in the bank account." Not anymore. They're going to come and seize that and you're not going to have that no more. You ever seen The Pursuit of Happiness? If you've never seen The Pursuit of Happiness, take a look, because he had $600 in his bank account. He owed the IRS money. And guess what happened? They came in and swiped it all out and he didn't have anything and he went homeless. So there you go. Okay. Or Social Security checks. So don't think that, oh, if I'm disabled or they ain't going to get it. Oh, they're going to get it. They're going to get it any type of way they want. Okay. They're going to have their way with you. And they're not going to use no type of Vaseline. Okay. And they're not going to care. All right. So long story short, if you go into an agreement, just stick to the agreement. Please just do what you got to do. Okay. And everyone's happy. I'm happy. You're happy. I won't get phone calls in the middle of the night stressing me out. Talk about they done took all my money. Okay. I don't get those phone calls. Okay. It's very stressful. It's very stressful. Okay. And so you say, "Menda Renee, what does it cost to set up an installment agreement?" Now, let me tell you, I'm gonna be honest. If you use me, there's a fee. Okay. If you use any tax professional to do this, they're going to charge you a fee. Now, what that fee is, it varies by client. For me, it varies by client. I can't sit there and say, "Oh, my flat rate is 100. I can't tell you that. It depends, because everyone's tax situation is different. Okay. So what does it cost to set up an installment agreement? So they have the IRS has a thing called a pay now. It has a zero setup fee. It has no future penalties or interest added. Okay. If you pay the amount in full today directly from your checking or savings account, or by check or money order, or debit or credit card, it's zero fee. Now, if you go into a short-term payment plan, that means 120 days or less. Ooh, okay. It's still a zero setup fee. Okay, plus accrued penalties and interest until the balance is paid in full. So what that means is they will continue to add penalties and interest until you pay that loan off, that amount in full, in 120 days or less. Okay, so after applying for a short-term payment plan, you can pay the amount owed directly from your checking or savings account, check, money order, or debit card. All right, and then please know that they also charge a fee when you pay by your card. Okay. All right. Now, a long-term payment plan installment agreement is a monthly that you pay every month. Okay. Pay monthly through automatic withdrawals. It's a $31 setup fee through the IRS. Okay. If you have low income, your setup fee is waived. But if you do not have low income, there's a $31 setup fee. Plus, they accrue penalties and interest until the balance is paid in full every month. Remember what I told you. You accrue interest every day. You accrue penalties every month. So that $5,000 is accruing interest every day. You're hitting penalties on that every month. It's just constantly growing and growing and growing. So you want to definitely try to pay that stuff off as soon as possible, okay? You can pay the amount through your direct debit, okay? Automatic payments from your checking account. Installment agreement is a DDIA. This is required if your balance is more than $25,000, okay? Now, you can also pay each month non-direct debit, meaning that you don't have to have them take it out your account. All right, that fee is $149 setup fee. If you have low income, it's $43 to set it up. It can be reimbursed if certain conditions are met under a low income only. However, once again, accrued penalties and interest until the balance is paid in full. They're just hitting you. They're just slapping you like you some type of street stop. Okay, I'm just trying to tell you. They're having your way. They're having their way with you right now. Okay. So after applying for a long-term payment plan, pay amount owed through a non-direct, okay, so not coming automatically throughout your checking account, monthly payments, including payments directly from your checking or savings or by check, all right? Now, they have revise an existing payment plan installment agreement or reinstate after default. Now, there is life after default. Okay, I don't know how good it is, but I'm just saying there is life after default. Okay, so it's a $10 fee, which may be reimbursed if you're identified as low income and certain conditions are met. All right. Now, you say, how do I manage my plan to avoid default? Just pay it. Okay, that's common sense. But somebody told me that common sense ain't so common. So, damn, that's tough. Common sense ain't so common. I think that's worse than having owing taxes, okay? When common sense ain't so common. That's tough. Okay, we're in the home stretch. We're going to make it through. All right, take a deep breath, y'all. Let's say, tomorrow's going to be a new day. I'm going to call Menda Renee and we're going to get my tax debt. I'm going to be free. I'm going to be free and I'm going to be free. Yes, sir. Okay. How do I manage my plan to avoid default? In order to avoid default of your payment plan, make sure you understand and manage your account. 1, pay at least your minimum monthly payment when it's due. Okay, not the day after. Okay, as a matter of fact, set it for a week before. Okay, so you're never late. Okay, file all required tax returns on time and pay all taxes in full and on time. Contact the IRS to change your existing agreement if you cannot. Listen to what I'm saying. If you cannot stick to this agreement, do not let it go into default. Contact the IRS, communicate with them, tell them that you're having a hard time. They will work with you. Trust you me, they will work with you. Okay, they're not all bad. Okay, they don't care, but they will definitely work with you because they want their money. Okay, I'm trying to tell you, they will work with you because they want their bread. Okay, but they're gonna get it regardless. Okay, whether you do it or not. This is just a better way of saying, hey, listen, I'm trying to work with you. I'm trying to save face with you. I'm trying to get in good standing with you, okay? All right. So your future refunds will be applied to your tax debt until it's paid in full. So what this means is if I owe taxes in 2020, if I owed $1,000 in 2019, and I just did my taxes for 2020 and I got a $2,000 refund, I'm only going to get $1,000 back because that other $1,000 is going to go pay my tax debt, which is not a bad thing. I tell people all the time, let them take it because that's less money that you got to pay. So listen, you got to do what you got to do. But me personally, hey, if I got to pay, I pay. If I don't, listen, okay? I'm just saying, all right? Make all scheduled payments, even if we apply your refund to your account balance. Keep making them. Don't be like, oh, well, they took that $1,000. I ain't got to pay them. You still got to pay them. It's an agreement. I don't care. You still have to pay them, okay? When paying by check, include your name, address, social security, daytime phone number, tax year, and return type on your payment. Contact the IRS if you move or complete a mail form 8822 change of address. Confirm your payment information, date, and amount by reviewing your recent statement or the confirmation letter you received. When you send payments by mail, send them to the address listed in your correspondence, okay? Now, there may be a reinstatement fee if your plan goes into default. Penalties and interest continue to accrue until your balance is paid in full. If you received a notice of intent to terminate your installment agreement, contact them immediately. They will generally not take enforced collection actions, okay? So when a payment plan is being considered so they what they're saying is the IRS will not take enforced collection action when a payment plan is being considered while a payment plan is in effect for 30 days after a request is rejected or terminated, or during the period the IRS evaluates an appeal of a rejected or terminated agreement. Whoo! Yes, sir. That's it. That's it right there. That was it, you know. So long story short, pay your taxes, okay? If you can't pay your taxes, immediately try to jump into an installment plan. Communicate with the IRS. Find a tax professional. You can hit me up, right? Listen, I'm on Instagram, Right Now Business Solutions. I'm on Facebook, Menda Candelaria DeVoe. Ratchet T, you can hit me up. You can even call me. As a matter of fact, don't call me. Text me 561-299-4100, and I will help you through this. You're not here alone. I'm here with you. That's why I do these podcasts. This is for the embetterment of us, of our Black, Brown, Latino, Hispanic people. Come on, man. Y'all got to wake up, man. And don't be shamed. Don't be scared to be like, yo, I need some help. Like, I'm underwater. I'm drowning. Let me tell you something. Once you get that debt off your back, you're going to feel so much better. I promise you. You're going to be you're going to be like, oh my God, thank you so much, Menda Renee. I really do truly appreciate it, because now you can live your life fully. You don't have to look over your back and be like, oh my God, are they going to take my taxes? Oh my God. You know what I'm saying? So listen, just do it right. Just do everything right. You know, like I said, you're not here by yourself. Hopefully you found this information. Great. Don't forget, I'm going to be back with Etienne on Friday at 6:30. So super happy to be back into the studio. So it's super dope. It's such a different vibe when we're there. You know what I'm saying? And it's good that me and Etienne chop it up. Okay. So don't forget to follow me or follow us, Ratchet T Podcast on Instagram, Facebook. Don't forget to subscribe to our YouTube channel and share with your friends and family. Okay. It's okay. Listen. You ain't gotta be ashamed if you owe taxes, honey. There's nothing to be ashamed about. When you should feel shame is when you don't tell nobody and ask for help. That's when you should be shamed, because there's a lot of ways that you can get through this. Okay, you're not here. You are not alone. I am here with you. There we go, Michael Jackson. Where is he right now when I need him? Okay, that's what we need right now, Michael Jackson. You are not alone, honey. Okay. But until Friday night, 6:30, I'm your girl, Menda Renee. You know what? I feel good. Let's get out of here. Right.